Hi everyone, welcome back to this week's Technical Insights. Last week, we talked about the Dow falling more than 600 points for its worst trading day this year. And last Friday, we saw a huge rebound where the Dow again jumped more than 570 points for its best session of the year, wrapping up a strong month of May after the Fed preferred inflation measure, the PCE price index, came in largely around expectation. Closing the month, it was a winning month of May for most of the major US indices, which were up sharply, registering a sixth positive month in 7. The Dow Jones Index added 2.3% in the month of May, while the S&P 500 rose 4.8%. The Nasdaq, driven by the tech rally, gained 6.88%, notching its best month going back to November 2023. Before we dive deeper, let's look at what happened in the market last week, and let's have a quick look at how the global markets have ended last Friday. Our Singapore Straits Times Index ended higher on Friday, up 13 points or 0.4%. In Asia, Hong Kong Hang Seng Index fell 150 points or 0.83%. Japan Nikkei 225 Index rose 433 points or 1.14%. Shanghai Composite inched lower by 5 points or 0.16%. In the US, the Dow Jones Index climbed 574 points or 1.51%. S&P 500 added 42 points or 0.8%. Nasdaq Composite, however, ticked lower by just 2 points or 0.01%. The core PCE price index increased 0.2% in April, the same figure that was anticipated by economists hoped by the Dow Jones. Core PCE rose 2.8% on an annualized basis, slightly above the 2.7% prediction from economists. This is the most important economic data and came without much deviation from market expectation, and market breathed a sign of relief after the report as we wrap up a very strong May. Although we had a rosy monthly view, we did have a tough week in the final week of May for the major US indices. The Dow Jones Index lost 383 points or 0.98% for the week to end at 38,686 points for a second consecutive losing week. The S&P 500 dropped 27 points or 0.51% for the period to close at 5,277 points, ending its 5-week winning streak. Tech-heavy Nasdaq Composite Index fell 185 points or 1.1% to finish at 16,735 points. Investors also reacted to the latest corporate earnings. Dell Technologies tumbled more than 17% despite strong earnings after saying its AI server backlog was smaller than anticipated. Meanwhile, apparel retailer Gap jumped more than 28%. In Asia, Hong Kong Hang Seng Index fell for the second week in a row. The Hang Seng Index lost 529 points or 2.84% to close the week at 18,079 points. The Hang Seng Tech Index dropped 108 points or 2.86% for the period to close at 3,690 points. Investors took a step back to assess the risks surrounding China's economy as the initial euphoria about the policy support in response to the weak manufacturing data evaporated. Still, the City benchmark advanced 1.8% in the month of May for a 4-month winning streak, the longest since February 2021. Week to date, our STI index rose 20 points or 0.6% for the third consecutive positive week. Top performer on the STI index last Friday were Hong Kong Land and YangZiJiang Shipbuilding, up 2.11% and 1.33% respectively. So let's move to the charts and analyze if both stocks will continue to rebound and rise further in the next few weeks. First, let's have a look at Hong Kong Land. We updated the analysis of Hong Kong Land on the 13th of May video, where Hong Kong Land share price was trading around the $3.35 level. We concluded that the next target level for Hong Kong Land share price would be the upper bound of the Bollinger Band at $3.43. A week later, on 20th May, Hong Kong Land share price hit our target level of $3.43 and touched a high of $3.55. Following that, the Hong Kong Land share price retraced below the 20-day moving average and is now using that level as a support around the $3.37 level. The formation of a new year-to-date high on 20th of May signals that Hong Kong Land share price may have bottomed out at $2.78 and possibly moved into a new uptrend with the formation of higher highs and higher lows. On the 20th of May, upon reaching the year-to-date high at $3.55, Hong Kong Land RSI hit a high of 71 points, which indicated that the share price was in an overbought condition. Hence, the retracement below the 20-day moving average was not unexpected. The RSI has now retraced back around the 50 points level last Thursday, and on Friday, there was a huge buy volume by pushing up the share price to the $3.39 level. The RSI is now showing a healthy reading of 58 points, which shows that there's still positive momentum in Hong Kong Land share price. On the MACD indicator, we saw a subsiding downtrend momentum last Friday. If we see another similar reading of a subsiding downtrend, then last Friday rebound on Hong Kong Land share price would likely to continue upwards, and the next target for Hong Kong Land share price would be the year-to-date high at $3.55. Next, let's have a look at YangZiJiang Shipbuilding. We covered YangZiJiang Shipbuilding just in the last week video, where we cautioned traders against chasing the rally in YangZiJiang share price and wait for a retracement back to $1.70, but that did not really happen. Last Tuesday, in a quarterly business update, the main board listed shipbuilder said its order book swelled to a record $16.1 billion, and it now has 193 vessels in backlog to be delivered by 2028, with a total compensated gross tonnage of 7.45 million. This caused the stock to jump more than 10% on Wednesday and around 20% for the whole of last week. Having broke the previous year-to-date high around the $1.90 level, this level could now have a change in polarity to become the new support level. The 20 days moving average, which is the Bollinger Band basis, would also be a level a lot of traders are watching when chasing strong trending stocks. With both the RSI and the MACD indicator now seemingly in overstretched zone, we will reiterate against chasing YangZiJiang share price at this level of $2.28 and be patient for a retracement back to the previous year-to-date high around the 190 region or even the 20-day moving average at $1.85. Such situation does happen and we can't catch every opportunity. If the ship has sailed, the next best thing we could do is to look for the next best opportunity. And these are the updates that I have for you this week. If you do find this information useful, do remember to like, share, and subscribe to stay updated with the latest market development. And I'll see you again next week in the next Technical Insights.